Good morning to everybody. And thank you for joining because this is being a long weekend. Lot of time in the long weekend, what mostly happen that people are going for the vacation. So I'm assuming that you are having a good time, long vacation, enjoying time with your family. And this is my one of the favorite topic, which we can relate most of the time, that how we are being able to make sure that how financial planning and financial thing is more linked to the emotions and then anything else. So that's a good thing. So I'll be happy to have many more questions. I'll try to say how much we can reduce the time and take more questions. So today's thinking is, what are the different bias? Sometimes we don't know the name of bias, but yes, we are many time bias. The bias comes from our past experience, the past thinking, how our bring and brought up, our surroundings. That is the what we always talk about, the bias, and how we can overcome. It is that's the way it is. It is not only in financial. It is, I can tell you, in day to day, our business, our personal. This are very common, but today I'll be taking care on the financial side. So, what are the different biases? What are the different investment bias? How investment bias works and behavior finance. So, when somebody comes and asks me most of the time, it's a simple things that how people make money. So, I always tell people it's not the people who have more money make money. It's the people who have a long term view with a discipline. So that is more of a type of the different behavior things make sure. So I have, because of our job, of our work, we meet many people, and I have can tell you without even thinking twice, the people who are very disciplined and able to think long, even they are earning, or they started investing even 1000 or 2000 and their portfolio is so big. People who have 5 crore even earnings, their portfolio is very small. So it is sometimes, it is not what money you have and you earn. The thing is how you treat that money is more about. So what is a bias is a very belief, as I told you. It is irrational assumption or a belief that distort the ability to make decision and the fact of evidence. So this is, I can give you a simple example. Is lot of time people have said, no, I have invested in past in shares or in mutual fund, it is not done good, and that's why I don't want to invest, or things has not gone good. So many times it happens that it is taking an issue. So let us take it even as sometimes we have invested in a real estate and all the real estates are undergoing the some legal issues. So next time when you wanted to buy some real estate, you will say, okay, there's so much of issues and all, we don't have it. So most of the bias is normally formed, which we may not have a fact and figure. So it's not necessary what we have taken the last time, this time also happened, but that our past experience and evidence and things normally takes us to take a decision on a conscious or subconscious mind. Most of the time it is conscious mind, but of course sometimes is unconscious mind it works. So there are different types of investment bias. So investment bias is like a, how the evidence has been given and what all we have assumed. Such time it's like a, how are the risk factors and outcome in the investment has been taken care. So simple thing I can tell you, I'm not against any company of investment or something, but it is. I was talking to Anil and another people, and I said there are so many rules and regulations are coming. We should have now, this year onwards. They have a lot many things what people can put it in a, I can say, on advertisement or infographic or YouTube, because I'm sure you must have heard there are so many scams are going on the influencer and other things like that. But I was trying to say, sometimes people says that I got 46% or 56% or something, and somebody told me that they are getting no risk 15%. And I said, oh, it's very difficult, sometimes the fundamentals are not able to do. Then I asked them, okay, give me the data, and it was an absolute return. So if somebody is giving me a 15% return, an absolute in 3 years, it says to 5% approximately. So I was trying to say, I am sure sooner or later, all these authorities will come into think that what way we should communicate, because nobody's telling lies, but they are communicating in a different way. Somebody's talking in absolute returns, somebody's telling in a rolling return, somebody's telling in XIRR or CAGR, whatever. So they have a different ways. So sometimes we have to understand how we take those communications very clearly. So just now, before 1 minute before this itself webinar, I got a call and somebody said that my banker is asking me, if you do this, you are going to get a 16 to 17% returns. Then I asked them, I am just getting into the things, you just give it across to me later. And when I took it, the XIRR, it is actually coming to the 7.23. So how people, I'm not saying distorted, but most of the time, the way of a communication and the evidence, we need to be very clear when we take the investment. And I have not done much. I've been trying to do myself learning quite a lot. Try to do Google good enough. And if you all are great techie, you can start thinking of Chat GPT to do these kind of investment decision to help you out also. So, what are the clarifications and classifications we have it in our different biases? So, I'm sure all of you must have find it out that okay, one is normally we'll say, like how you have a right brain and left brain between the number based and emotion based. The same thing happens here also. You have a more of a logical mind and you're taking an emotional mind. So, I am actually most of the women that comes, it's not necessary always, but yes, we are more of emotional side, and people are salesmen are more on a facts and logic side, but of course it's a mixed of both. How our percentage, our behavior, it is depends on each and every individual. It's not things if my daughter is in this, she will say that how you can be so gender biased kind of it. So I'm not saying that, but I have most of the time people claims that part of it. So cognitive bias is the very things where we try to see on how our personal beliefs, the thinking has to be hardwired with the human brain. We normally don't take emotional side of it. So I'll give you some example of ours. Like if we were doing some of the painting this time, and when I started looking the cupboards, especially the lofts. And I said there are so many things which are linked. Okay, these are the kids when they were small, the kids, you have strollers, you have a car seat, you have so many things which I have put it across. And then you start linking emotions to that. And then you start saying in a decision, okay, I should keep it or give it. So this in a finance side more, I can tell you, when we got our first car, I was not happy to sell because I said, okay, there are so many emotion attached to it. But then Anil said, if you're not selling, it will not be taken by the kabadi wala also. So how you make sure your things should not be emotionally attached when you are doing any of the investment, even selling or buying. We will go further and you will realize it. Actually, the market works most on the emotions than actually the logic. Very, very rarely we'll see. If you see any of the advertisement, people will be looking that, okay, how you are able to make sure your kids achieving their dreams or how best you have in emotions as a retirement. They will very rarely will say that, okay, this is going to take care of this much of percentage of the money or whatever. So these are the classifications where we try to say, oh, the right brain and left brain, emotional versus cognitive. What is the behaviors finance? Very, very important. We comes across to the finance and psychology and sociology. All together, it's becoming a behavior finance, which draw, it's like a common, you can say, subset of all, where you take a decision based on a feeling rather than the logic. So yesterday, I can tell you, it's a very common thing. So I'm telling you, not only in finance, it's a real behavior side is, my friend, they says, okay, the mango season has come. I have taken one person's the box of 12 and it is so sweet. So you take it. So irrespective of anything, we just think, okay, this is a sweet mango and we take it across. We don't, even I didn't ask also what mango type it is or whatever it is. And you take an emotional side, okay, because it is good and everybody likes the sweet mango. So sometimes you don't have a logic because you are taking as an emotional call when the information is misunderstood and taken on the context. So that's another side. We always try to see how the informations are given. And intellectual is when the wrong mental process lead to the faulty judgment. Sometimes, yes. This at least happens to me very often, and I try nowadays reducing to go from a Google Map most of the time. Nowadays, I try to do the closest main roads, and then I'll take the inner ring road with the Google Map, because I normally takes it and then it goes to the wrong place, because most of the time the if it is closed, it is not being shown. And nowadays, because of all the, I can say, elections, there are so many roads are closed. So these are the behaviors which is very common, and focus more on a finance. Yes, these we need to take care, especially when you are linked to buy or sell any of the financial assets, and it can be taken. I give you knew the last week itself, one of the customer called me and he says, Dachna, I have taken a house or a flat in a Noida of 1.2 crores because my friend was taking, and now it is under the litigation, and that litigation is going for 14 years and I'm still not able to do it. And because it is still in my agreement, I'm not able to take a benefit of capital gain because I'm selling my company. So sometimes these faulty judgment comes on a the way it comes on the how we process. These are the simple side how we have think about social influencer, our family, friends, people whom I meet, how you take care of any emotions, have you take care of the self deception, and simplification is the best part of our behavior finance. I normally do a behavior finance only on two levels to make sure it's a goal based, and try to not think on the emotion side, even though if I'm going emotions, and it will make sure that it goes a better way. So I wanted to run the poll for each, I can say, emotions. I'm trying to have a query. So we'll try to see how things are working. And then we will try to see how our audience is saying the same thing versus what people do. So how do we invest money in any instruments? So it says we blindly follow the advisor because of my friend and family. You choose and analyze, use portal, newspaper, and other things. So we'll give you 5 more seconds. Around 60% people have voted. So we will just wait for some more time before we end the poll. And it looks very good, and which is a very, I can say, good audience, where we feel that around 72% as on today is analyze and choose, which is the best way to do. And I always tell people, whatever you have it, your family, friend, advisor, because it's your own money and your own choice, you should listen and take the decision which is called by yourself, by analyzing and choosing. It's a very good. So will Sanjay close it and show the thing hotel? So here it shows, I'm assuming everybody is able to see the poll response, which says that 6% blindly follows, 8% takes care of her friends and family, but 72, which is far behind from any other, which says that analyze and choose. You all can pat yourself, whoever has taken that. It is actually wise. I'm sure this is a combination of maybe family, friend, portal, but you analyze it and you take decisions. So that's the one thing which I always tell people to do it. Anyone, it can be advisor or a bank or a family or friend, you take everybody's whatever opinions, but decision should be yours, because you cannot blame somebody else. It's your own hard earned money, so you should be able to take that decisions, that yes, I have been seeing, I have analyzed and then taken it. If goes wrong, it's fair enough, it is a learning. Next time we will very more careful to take care on those side of it. So, what are the six major biases? There are many more, but these are the main six biases which we say. attention bias, confirmation bias, recency bias, herd mentality, which is very common, loss aversion, and optimism. So, what are these biases does? These are the very tendency to prioritize the process of certain type, and they keep coming. So I can say you, I don't know much. I'm not a person on social media, but I can tell you when I play a Sudoku in thing, and whenever I go, so whatever I have been speaking or something that keep coming on those below the games, and that seeks the attention, and that's the way the normal marketing things works, and this is the same thing working in a financial market also. So how the people will have advertisement, you will have the audio, video, podcast, YouTube, whatever you can think of, things that which keeps coming to you and which stimuli when you wanted to buy. So this is attention bias. Confirmation bias is tendency to search and interrupt, favor, call the way the confirm the support somebody. So this is the very normal belief. I can give you again another example is, there's a couple came to me and wife wants to buy the what you call, I can say the plot, or what can say flat, and the husband says no, as of today I don't think so we are able to take an EMI and all the stuff. We will just whatever money we have we will invest and we will do it. So they were asking me, what is your belief? So I was telling, if it is the first house and you wanted to have for yourself, it is a good time, because that time I'm talking about 1.5 year back, the rates are low, you can do it. And because it her belief went in my own thing, so which supported her, and she took it across that okay, this is the correct way and do it. So you just search what is your belief, somebody else's support, and then you go ahead and put it across. So this is the confirmation bias. You want somebody to just confirm that you are doing and thinking is right, so you go ahead in that way. Psychological agency bias is the psychological phenomena which given more importance to recent event compared to what happened in a while. So this is a very, very common. I must have given this example many times. Our PMSs are been doing amazingly good. We are in a top two, we are in a top quartile, but that everybody, even it's a PMS Bazaar or PMS AIF, everybody is giving only 3 and 5 years returns, which is coming 30-35% returns. So they are just seeing the recent event, and then they call me and they says, okay, I want your PMS to take care, me giving 30%. And most of the time I try not to take those customers, is not because it's a product. I says you are looking only recent events. So please look at a longer term, 5 years and 10 years. So you should be taking care 14 to 15 for the large cap and the small cap around 18%. If you are in the similar way of looking 3 to 5 years, please take this PMS, not just because of the recent event we are been doing good. So most of the time people just look very recent events and the recent I can say investment also. I never understand why people have to look 1 year, 2 years, or 2 months returns when we are looking investment for your longer term. I normally don't look. Now, when I go to the customer, I normally start with 3, 5, 7 or inception only, or 10 years plus, because our intention is you are taking for a long term. The small term, they themselves will be, fund manager will be able to take care of those. So recency is a very common thing. Don't go about it and don't get follow because of recent event. You should look at it a longer term. Herd mentality is always been the same, as by human nature we always like to go together. So even it is house, investment, gold, or anything. I have been having a good morning walk team, and when they go, so they says, no, I am just going to buy a plot, Rachna. Why don't you all comes and we'll see, and they will try to buy together and all this stuff. So it's a very herd mentality with the things which we try to go together and do it across. Loss aversion is individual what is avoiding loss to acquire a equivalent gain. This is the another things which happen to the individual, very things most of the time they go wrong because they wanted to avoid the loss, and attend it become loss become more than the what. So that's a difference. A lot of people says to me, when somebody should hire the advisor, and this is the typical answer I give it across, which I say that the time you feel your portfolio is big enough that your one mistake you cannot take care, because the difference between you and us is we can cut loss without an emotions. So we'll say this is not doing good. You cut the loss, take the loss, and put it across. But when you are seeing your own portfolio, when it is in a loss, you just think, okay, it is in a loss. I will wait for and make it at least break even or better. And they go into much, much more loss side. There are many, many stories on this with our customers. So now, slowly, they have started understanding that yes, we should not have the emotions attaching to that. And especially, I can tell you in our ESOPs, it's a very, very high on these kind of loss aversion bias. Optimism is always good, and of course, there's no doubt about it. Even we are very optimism on India market, and yes, things are going to be a little volatile, but we are very optimistic. So we see that optimism is the best part when you see, but sometimes it's not necessary that you are always a positive events comes. So these are the bull versus bear, which is the very, very common, and these are the six behavior impacting the investment. So nobody knows where is bull or bear. So whenever nowadays I go for investment portfolio review, that question keeps coming that US in the recession, is it we are going to go back to the recession or not? I'm sure that Anil has done the session on overall year and what is an RH view, but we still believe that we will be start going up, and Indian market is going to be very good in the coming years. So how to take care and understand the biases and how these are impacting are with the examples. So this is what I can give you. I'm sure if any one of you had a past time when you are striking the instant analyzing. So this example I give it to everybody is most of the time is like when you're driving a car, most of the people drive from the front mirror, not a rear mirror. But whenever we see lot many data and all, we just see the past returns. Most of the people, whenever somebody comes, I ask this question: on what basis you evaluate and pick the funds? So they will say, no, I have gone to the, maybe it's a value research, money control, or whatever. I've seen that the past returns or the ranking and I have taken. Even though it is mentioned that these two are not going to be the same in the future. It's like that the person who is smoking, it's written and very clearly smoking is not it's injurious to health, but still he smokes. So similarly, the past returns and the ranking is not going to guarantee you for the future. So I always says it is better to understand the fund manager's what is his view and then take it, because fund manager is the driver of the car and he is looking in his own view what he wants to drive that scheme, instead of taking the multiple, I can say, the, I'm not saying always it's wrong, we also do the past returns perspective and other things, but most of the time we do 50% for the past and 50% for the fund management view. So this is the another things whenever you are doing the options, because when there are so many options, people says, Rachna, it's very difficult to say what is good. It's like inky pinky poinky, you are buying it across. So I say take some time because it's a hard earned money, and make sure that you are taking a proper decision. Then this is the any product or investments. This is the one small thing I can tell you. Many more things SEBI has been trying to see. They have, I think so, banned 11 companies. We being ourselves are having a RAI license. You will surprise to know every 1 year, 2 years, we keep getting a notice because somebody is misusing our what you call RAI IDs and giving a tips to others. So this is very common. Now they have started saying that you should be aware not to take tips from television or the social media or telegram or whatever, and not to have these kind of things, and make sure that it is being taken care of. So we'll have the poll for a second. How normally you buy mutual fund? What data you look at if you are having to buy a thing? So is it a ranking or a past returns or some more parameters like alpha, beta, standard deviations and others, or follow the advisor or none of the above? Can we have the poll too, Sanjay? So can I request everybody please to do it? It's always very nice to see the people who are very well aware in the finance and they're doing the best. I think so. The most of the things it is coming that they follow either the more parameters than just ranking and the past returns versus the follow. So 45% as on today is saying that they takes care of more parameters and 17% is saying that they take the advisors. 30% still says that they are taking the past returns. So indirectly 40% is ranking plus past returns. So we will end up, it is very close by now. When I do it, it's 50, 15 and 30, 40 odd. So can we show the result, Sanjay? So I'm assuming people are able to see the result, which talks about if I take ranking plus past return is almost 38%, 47 is with more parameters and advice. That's a very good combination. So most of the time you should take care of more both the things. It is a combination of rank, past returns and other parameters. Or I'm assuming if you're having an advisor, advisor is taking care of all the top three part of it. So these are the mistakes you can see. Most of the time, people have been chasing the best performing fund. Whenever we see the 3 consecutive years, the which are the first rank, the other 3 years they are the maybe the worst or very low. So you can say the ranking 1 to 10 in 12 to 14, and the next 3 years they are totally the difference is so much. So same thing on 13 to 15, and you can see the ranking is in even 3 letters is going on. Same thing on 14 to 16, it is in 17 to 19, they are this. So most of the funds, if you see, these funds are being who are the top 10 may not be in our top 30 or 15 sometimes. So most of the time, top performing funds, not necessarily the next 3 years is going to do the well. So that's the one things which we have to make sure that not to see most of the time only performing funds. Same thing, it works with the multi-cap and other cap funds also. I can say you these are the colors which you can see. No other people are the similar in the same next 3 years. So it's always better to take a combination, what we keep saying, asset allocation or diversification on cap wise also, and overall asset allocation also. So this is large and multi, and that was that is large and mid, that was multi. So investing on the based on the recent past returns. So you can see these are returns in 2017 and 2018, how the returns are. So most of the time people will just go on the ranking and then you will see that how it is being taken care of. So just ranking and we people call a star or whatever returns. Please make sure don't take blind on that, because that's a very common thing when we are asking. This is what people have been doing that. So this is the second, which I says confirmation bias. So you want somebody to help you. It's like that, no? It's like a kid comes to the father to ask something, and then father says no, and then he says, okay, mother must have said okay, not even yes, and he feel very nice that I got a mama's permission and I'll go for it. So it's like if somebody wants just one extra helping hand kind of it to make sure that you are doing the confirmation right, and that's where the hypothesis goes to make sure that everybody is been doing the belief is right what I'm looking for. So this is what existing bias or a belief we filter to the confirmation and then we give it to the investor, and that is what the confirmation bias is all about. So investor decide first and then wanted to have a support or a data what he has taken decision is right. So this is the another thing when I try to do lot many seminar and webinars for the women, and I keep saying that they just wanted somebody to support that my decision is not wrong. So I'll give you a simple example which is not so linked to the investment. So when I used to go with my mom and for buying a sari or something, she will ask 10 times that is this looking good or not, this looking good or not, and she will buy what she wants at 10. So I was telling, why you keep asking us when you will buy what you want? And she said, no, if something is goes wrong, then I can tell you that you have also told me, now you can go back and do it or return or whatever. So I used to always say that she will choose what she wants and then she will ask us most of the time it is good or not. And if things didn't go well, so she'll say, okay, you were also in party to that. So sometimes this confirmation bias is not only in finance, it's on a day to day. We wanted somebody to be with us. If something goes wrong, who will be able to take care of it? So impact on a confirmation bias is one end is choosing similar product, not diversification. So when I go to the lot many times in a women oriented webinar, I will see that people normally like to take a fixed returns like a FD or insurance or PF, PPF kind of it. They don't want it to diversify, even though I keep saying that because of a taxation, it's not been happy, but this is no, I don't want it to take a stress on the market movement. So I keep saying when you're taking such a long time, 5 years, and even 20 years policies, I'm sure that is doing good. But somehow in your mind, they always says that I love the word fixed. So that's a confirmation is normally they like to do that part of it. So diversification is less. Sometimes they are not even taking care of inflation. One may decide to invest in particular avenue, as I told you, to look the overall level, the other side of the positive. So this is the another things which is happening very recently. You all can say that market last 1 year has done actually almost like a 0.68, which is started and ended the same day. So I still remember that 30th of March was the same, and 31st March actually market went up and then it become like a 0.68. So most of the time it's like a how your past 1 year returns is taking care of what is an average 5 years returns. So when I go about it, that everybody is talking only 1 year, and it is a human psychology. When the market is low, they always try to say, okay, FD was better. And when the market is good, they says, no, the benchmark is better. So sometimes this is the human psychology. You always try to look at the better side and says for a short term how it is being taken care of. So that's the one thing when I believe when we are looking, I normally look with the goal based. I think that's the best way from my own way and the customers that we all are linked to our emotions, our family, and near and dear ones. So if I'm able to take care of my all the goals, I don't have to worry what my market is going or what things are happening as long as my portfolio is taking care of my all the goals happily. So choosing stock market versus mutual fund being talked the most always is a trending. So that's another things. Even though it doesn't appeal me the stock market much, but lot of time you will surprised to know if we have a 10 internship people, all of them wanted to do only on the stocks, and this is how to make double the money in a 1 day or 1 year. And I keep saying if I'm making a double every year, I must be next to Mukesh Ambani and all. Why I'll be sitting next to you? I keep teasing them, but yes, that's a way the bias is there in the people that I can make multiple of the money in 1 year. So I say there's nothing wrong. Somebody must have made it, but are they making year on year or not? So there's a recent customer again came. He lost 75 lakhs, and I asked how you lost. So he says, no, my friend has told that, okay, we can do the long and short. By the way, I don't know much on this long, short, and other things, but I know there's something hedging he's doing. And he says, you have to buy in the lots. And it went wrong, and I lost 75 lakhs. And I said, why the hell you put so much of money? You must have taken 5 to 10 lakhs. That's what I keep telling you to play around with 5 to 10 lakhs. He says, no, because when you are doing, you do in a lots and that was not coming enough. So that's the way we do. So sometimes I always say that people wanted to make a quick money, and actually they lose the full principle itself. This is the another things last 1 year happened. I don't want to name it, but somebody says I'm getting a 2% returns year month on month. Somebody is doing, and he is trading in my behalf. I said, good, please go ahead. I don't think so. Somebody is able to do. It's very nice. And the same person came back, Krishna, now my principal is not there, what to do? So these are the things which you all should be aware of. So I keep saying when things are very rosy, it's something is a loop where people are not talking. So most of the time, if somebody tells me more than 15%, I normally don't even listen to them because I know there'll be higher risk and which they are not able to say. So these are the things. Please don't go into media. Our intention for these webinar itself is to educate and make sure that you do it yourself, but you earn your hard earned money, not to go waste because to just to make a quick money. So another person whom I know has lost again around 15 lakhs to 20 lakhs recently, and taken a loan, not able to pay loan, lost the job. Lot many things are happening. Some things we are not in our mind, and things we don't know. So I keep saying we should take a risk how much we can afford. So which we cannot, so better not to do it. That's the easier way for me to think about it. Invest for the short term, miss in the turning points. Not able to do here a lot of things. Like if somebody came and told me, Rashna, I will do an ETF, and then I said, okay. I always tell people nothing wrong to try it out, and it worked wonderfully well for 2 years. And suddenly, because of Adani, all the ETFs and other things, passive fund versus active funds has gone worse, and active funds normally as in our Indian kind of market was do always good. And then he says, no, I wanted to go back to put everything into you. So I'm saying these are the learning for us. Try to be not reinvent the wheel most of the time. So we will do again as a very short poll, which will say about what is the duration of the returns you look at most of the time. Sanjay, can we have? So around 70% has done, and I didn't see the time. Actually, I'm running out of the time also. So we will stop the poll and says, which is a very healthy way of saying around 66 plus 20, which is like 86% people see 3 and 5 years, which is a good thing. So yesterday I was doing some analysis for Sensex and Nifty of 5 years, 10 years, 15, 20, 25, 30. And you'll surprised to know these keeps changing the time where we are looking. So if you see last year, it was around 14. This year, it's around 12 because last year market was not good. So they get averaged out. So it is always good to look 5, 10, 15 and whatever your goals are. So this is the another things we are always have the things that golds are good. And when I speak to a lot of women, they says, oh yeah, gold is doing good. And you will surprised to know I have taken the XIRR from 1998 till now. The 1998, the gold was at 2000 rupees per gram, and now it is around 5000, I'm assuming. Somewhere close by, that's what the rate came into that part of it. So most, and if we have a jewelry, of course, if you sell it across, you will have a making charge, other charges. There was a debate in our office that, okay, most of the women, they always says, Akshay Tritiya, I will take for daughter and all this stuff. So when we got Smriti, I'm talking about 20 years back, I said same thing to Anil that, okay, I'll buy something for Smriti. And he said, you don't know, your choice is not the same with her. So you just buy the gold ETF, not gold. So that's a difference nowadays. The things has come, but yes, I'm talking about overall gold as the is very, very not so good, but we always believe that golds are doing. So it's again in our own bias that we believe that it has been doing good. So this is a small video I will run.
Two brothers, Sri Ganesha and Sri Kartikeya, one day decided to go on a race. 3 times around the world. Sri Kartikeya leapt on his peacock and flew around all the continents, all the mountains, and all the oceans. Whereas his brother Sri Ganesha went around his parents thrice, and he claimed the victory. How did Sri Ganesha win the race? Sri Kartikeya focused on the world and went around it, while Sri Ganesha focused on his world and went around it. Similarly, to win the race of financial freedom, it is important to focus on your world rather than the world. Your focus should be on your financial plan. Drawing and understanding your financial plan is more important than understanding the market outlook reports. Your financial goals. Knowing and tracking your financial goals are more important than tracking the market movements. Your risk appetite. Knowing your risk appetite is more important than knowing market risk. Right asset allocation. Right asset allocation is more important than focusing on best performing scheme. Your financial advisor. Listening to your financial advisor is more important than listening to market experts on television. Always take the help of financial advisor and focus on your personal financial world.
So this is what I also believe, that you take advisor or not, that's your own choice. But yes, whenever you are doing yourself or with anybody, try to find what is your own need, not necessary that what my neighbors need or somebody else. As one of my customers says, I have moved from one place to another thing and my neighbor is having a car of 10 crore. Rachna, what to do? I said, you don't have to buy a 10 crore car. You be happy what you have a car. So sometimes we have to see our own, what is our limitation. It's not what my neighbor is having. So this is the very common. We always close our mind and thoughts and close our eyes and just go as a herd mentality, which is a very common things which we have been doing in the things, but we should not try it. How much we can try to avoid it, because that always, like, so many people comes together. There's nothing wrong when they do financial planning friends together, but I always tell them everybody is unique. Their investment pattern, their risk, their upbringing, their behavior is different. So you don't do what your friend has done is right, is always right for you. It may be right for your friend but may not be right for you. So it's like always take a decision when people are doing same. Is it our way of risk is same or not? Our families are same? So please don't follow blindly, I'm saying, which is happen to be in a herd mentality most of the time. So I'll just go a little fast from here, which is the actually the market always goes due to herd mentality. If you see, most when we are high, we should actually come out from equity and we put it to the debt, and then you should do. But people will actually keep buying more in the when it is going high, and they keep sell more because of the fear, and it goes down. So that is the one thing which is actually runs the market on the best way, I can tell you. So I'll just move this pool as of today, and we'll go for the loss aversion. This is the always another way I have noticed. Most of the time, people always think that, okay, I have lose that, then how much I have gained. So, like yesterday, somebody sent me the one write up, and they says that there is a lot many different version of this story has come. There is a plain paper, and they have put a dot, and they asked all the maybe student or the people what you can see, and 95% of the people say there is a black dot. So it's the same thing that actually 99% of the paper is blank, but nobody has told that paper is blank or a white, but everybody put across the thing. So it's the same thing. We always look for the loss, then instead of saying that how much I gained from the other. So this is optimism is the best normal way, and I always believe that's a thing which make us hope and we should do, but we should be little bit realistic. And optimism, I always believe with I can say long term discipline, with looking as the I can say little 3 years, 5 years, it worked wonderfully good. So this is the thing. Sometimes it worked and sometimes no, but it is behaviorally you will feel happy. But yes, you should be very taking a judgment properly that how you are able to take better things or not. So don't overpay the assets. I know somebody has told that I know it will give a double or it will give 3 times because that one nice road is coming, this road is coming, and then suddenly you realize it. Okay, that is gone for the any of these issues on the, I can say, like that. So I'll just pay this the last video and then I'll take the questions.
Behavioral biases are preconceived notions or prejudices that often lead investors to make emotional and irrational decisions when it comes to investing. Let us understand how behavioral biases can get in the way of sound financial decisions. Meet Arjun, who is 35 years old and wants to make smart investment decisions. He is a strong supporter of the equity market and decides to invest some money in equity mutual funds. He scans through a few newspapers to find out the most popular equity funds in the market and invests in one of them. This is attention bias. In this bias, investors tend to invest in financial products which are frequently highlighted, say in newspapers, news channels, without analyzing their suitability any further. The next day, Arjun meets his colleagues Naveen and Vinita over a coffee break. They start discussing on various investment options to build a retirement corpus. Naveen puts forward his belief of investing in safer avenues like debt funds and fixed deposits. Arjun, however, emphasizes on the potential of superior returns of the equity market. Vinita, being a strong supporter of safer investments herself, ignores Arjun's opinions and focuses only on what Naveen says. Here, Vinita exhibits confirmation bias. In this bias, investors tend to seek out only those information or opinions that support their preconceived notions about investments. They tend to turn a blind eye towards information that does not support their opinions. Undeterred by the conversation, Arjun decides to invest some money in another equity fund. He does a quick scan of the last quarter returns for the mid-cap equity funds and invests in a fund which has performed spectacularly in the last quarter. Here comes our next bias, recency bias. In this bias, investors tend to invest in instruments which have only performed well in the recent past, without considering their long-term performances or other factors. Naveen, unlike Arjun and Vinita, is in his 40s. He is confident in his ability to build a substantial retirement corpus, even if he starts investing when he's closer to his retirement. He is very optimistic that he would be able to build an adequate corpus to lead a comfortable retirement life. Now, this can be construed as optimism bias. In this bias, investors tend to be overtly positive about their finances, with or without substantial actions or information to support the outlook. The next day, Arjun, Vinita and Naveen go to an office party. During the party, Arjun gets to know about a stock in which many of his colleagues had invested and who were of the opinion that the stock has a huge growth potential. Arjun, not wanting to miss out on a good opportunity, goes home and invests in the stock. This is herd mentality. In situations like these, investors tend to follow market trends blindly. They invest owing to the fear of being left out, without checking the relevance of these investments with their financial goals. Now, Naveen, who was also at the party, was having a discussion about the performance of a stock. He had invested in the stock around 5 years ago, but the stock had not been performing well for the last 3 years. Also, during his discussion, the fact that the future outlook of the company may not be very promising came out strongly. Yet, Naveen was not comfortable redeeming his investment, as he hoped that the company would recover soon. Here, Naveen exhibits loss aversion. In this bias, investors tend to hold on to unprofitable investments. or invest in instruments having low return potential just to avoid realizing a loss. So how do we as investors keep these behavioral biases from undermining our investment decisions? By following 3 steps. Recognize and acknowledge that these biases exist. Understand how these biases can affect our decision-making process while investing. Understand whether our investment decisions are done objectively. That is, they are based on factual data and not emotional responses. Adopt strategies to make investment decisions free from bias. For example, plan asset allocation before investing. Review and rebalance portfolios periodically. Take help from professional advisors, and so on. Eliminate subjectivity and make investment decisions emotion-free. Happy investing. Behavior.
So with this, I close this presentation and wanted to have many questions, if I can answer.
Thank you, ma'am. Thank you for sharing valuable insights. We are already having few questions in the Q&A section. Meanwhile, I will like to request everyone to put down your questions in the Q&A section. We will be taking it one by one. So, in the first question is that why do you think Indian markets will go up? Any specific reason? Then we can take the questions from Q&A section.
So why you think Indian market will go up? Any specific reasons? Yes, there is no doubt about it that all the parameters it can be, you see the bonds, yield, you take the currency, you take the market, all the parameters from our side, it is going upward, and there is no doubt about it. Our I can say the average age itself is around 28, which is going to have economical things going up. We may have a multiple run because now US has been going to be in the recession for some times, and whenever there's a market cycle, when they have gone up, they will come down. So the same thing will happen in every market. If you see the China, it is taking its own sweet time. Japan is still the taking time. So that each of the markets are being taking a like if they are good in 10 years, the next 10 years they takes its own time. So similarly, this is the next 10 years, I can say it's the best time for India to go very good. So the next 10 years, I mean, say 21 to 30 is the best time. And if you invest, you will, I'm sure. So some product, when I always tell, even though I'm not a product specific person, but I keep saying people will remember when they get the money. So this is one of the things I keep telling. Then when I do for myself, why not do others? And it'll do a very wonderfully well if anybody is putting in a market this time. Second question is talks about why do FII sell aggressively in Nifty a week back and yesterday's. See, personally, I don't follow the market and all, but yes, FIIs, if you see, it is overall they have started investing back again. It depends on a more on a macro side and how these policies and other things works. So I'll be happy if you can give these questions and I'll ask our team to answer it. How do we decide a mutual fund which to invest? Because the stock we can judge based on BE and all. So I normally see that you can see nowadays there are so many products are coming. You have like, for example, 5 mutual funds. You can combine all the things and they will say what all the sectors they are having and what all the large cap, mid cap stocks they having. And according to that, you can just say that which mutual fund to take it. Of course, you should take a combination of your past returns and all the data which all you have said it, which makes sense. But no doubt about it, please try to understand the fund management person, how they are trying to do it. If, for example, in now last 3 years, we were not doing more on a mid and small cap. We were doing more on a large, multi, and hybrid. Last few months back, we are going back to the mid cap and small cap. So this is how the cycle works. So that's the way it works. So for us, if you are looking for it, start looking for a mid and small cap for the 3 years, 5 years perspective. It will be good. Do you think the Sharpe ratio is important parameters? All these ratios are having a some percentage you should give. So we also take around, we don't see the ranking of any other portal. We have our own ranking system. So we have it like a 3, 5, 18 total parameters. And after that, Anil and the research team give it, because the good part of it, I can say the good financial advisors, if they are good, bigger enough. So these fund management team, they calls and specific 10, 15 people, and then or maybe one-to-one also with Anil course to speak with fund managers. As per the fund management team, we give the ratios, and that's the way we come with the ranking sheets. So it's not necessary that most of the ranking sheet what others are doing. So they are doing more on, I can say, objective type data, and then less on subjective. So here we add our subjective ourselves and then do it across. The ratios differs for each of them. So because we have 18 parameters, so it is some percentage may go for that, but not always one. If I invest fundamentally for the long term in a good stock or a fund, ignoring irrespective of expensive of cheap valuation, what is the probability of losing money or making money? I can tell you I'm doing for last 26 years and my parameters is coming around 17% CAGR. Good combination. Not I'm not a person, because of course being a compliance person, I'm not on the stocks. I'm through mutual fund. You can continue if they are good for more than 15. By the way, statistics says that after 10 years, or the probability if you're in the market on the same, you'll never be negative. So making 15% is quite decent if you're keeping 10, 15 years. Can 15% CAGR can achieve the large cap fund, or it need to be risky more? No, I think so. Large, you will surprised to know, even I have kids HDFC gift funds, which is a hybrid fund, but only the thing is it's a locked in. It's giving around 15% being in a hybrid fund because it's a lock in. But yes, 15% on the large cap, but depends on what market you're looking. I'll give you example. Last 1.5 year back, the similar time, 1 year back, similar time, the returns was coming around 22, 23% of few funds in the large cap. But the market has gone down. So the time when you're looking is also depends. So that's one of the reason I keep telling people, when your goals are coming within 2 years, we should move it to the balance to the debt. We cannot wait for the market. So, but 15% is, so normally I always says easier way is to look at 12% returns, and I'm sure you will get it in a 10, 15 years, 14%. So 12 to 14 is a good range to look at. Yes, I have already answered first two large cap. What is the companies of PB for ratio example of TCS do well? Most of the time I don't know much on overall TCS do well or not. It depends on, because in the similar IT sector you may have a better, but it is a large cap versus a small cap. And I always, because worked in Wipro and Infi, so Infi, Wipro, TCS, we used to always have this PB ratios going examples and all. I always says most of our TCS or any of these companies, they have ESOPs. If you continue for long, it will do good also. But yes, it's better. Like if you see fund manager, they will say how they are performing the growth, because they are the large, they may not give the more than two digits sometimes. So it's better when you're looking as a fund management side is different than when you're looking as an individual side. If everybody thinks like that, it won't the market value versus book value. I didn't understand this question. If you can be elaborate, or you just write it to me in a mail, I will be able to answer this. Does psychology play in a vital role in investment? 200%. I can say, you not only investment, in a real life also, because most of the time we always go on our emotion and psychological based, not anything else. So I give you an example. I used to previously, when we started our own company, because we both have funded ourselves. So if money is required for the company, we will, Anil will say, okay, we'll remove from personal investment and give it. And then I will say, no, this is for the kids. We have to do it. We should not touch it across. So because that was my psychology, that I have saved for the kids and I don't want it to do. And then his answer will be, anyway, all our money is for kids. Why you wanted to worry and all this stuff? Then I thought it is a better way of doing it. So what I did it, and which is good to HDFC also, they have that HDFC gift fund, which is a lock-in fund. I put it across because you can't remove the money only. And then I'm sure, so it's so easy when our daughter is going now for the masters abroad, and it is thing. And I told her, so she says, okay, it's so costly, mama, how you do? I said, your portfolio, you can see yourself and you're able to manage yourself more than us. So it is very nice and feel happy kind of it, that okay, you have invested and they are able to manage that money. The same thing, of course, it is much more psychological, gives quite a lot of way. Which sector mutual fund to invest? Yes, we are telling to focus now mid and small cap. We will be doing very good. Is global inflation and deficit coming to the end and still rate hikes? Yes, I think so. It is going to end and then start going up. With this, I think so. My all the answers are done. If anybody have any more questions, I'll be happy to do. Otherwise, have a wonderful weekend, long weekend. Enjoy with your family and happy investing. It's by default conscious unconscious. We do psychological and emotional call. As long it's not coming impacting you, please take evaluation with somebody and do that. Simple example, yesterday we were doing that hikes and all that stuff. So one person came and he asked me that I wanted a loan, and I said, why you want a loan? And he says, no, I wanted to buy a 40 lakhs car. And I said, first of all, if you think you are not able to manage your loan and EMI, with why you wanted to take a personal loan to buy the car? So sometimes, of course, it's for me, people say that it's very difficult, Rachna, you are all thoughts, but my thought is always, if you have money, you spend, there is nothing wrong. But if you don't have, where that person is telling, Rachna, I don't know my job is secured or not, the way my company is doing, I will never allow them to do it. And I told him that till you're sure short of your next 3 years your job is sure, I will not allow you to take a loan for the car of 40 lakhs. You please take a 10, 12 lakhs car and finish it off. So sometimes it's, of course, old thought work, sometimes it's not. But yes, please try to take not an emotional calls, take a sometime a data based or a fact based.